Cryptocurrency has been through a very interesting year. I mean, Bitcoin went from like $65,000 a coin all the way down to $30,000 a coin. And now JP Morgan says that this crash is not over yet and there is more pain to come. So if you want to understand what's really going on, make sure you watch this video until the end. What's up everybody, I am Jaspreet Singh from theminority-mindset.com, where money minds rethink rich. More and more people and institutions and banks are starting to become a little bit more hip to cryptocurrency and Bitcoin, but that hasn't stopped the Bitcoin volatility. Let me start by just drawing a timeline of Bitcoin's price volatility in 2021. So Bitcoin in the early part of 2021, in January, was trading at under $30,000 a coin. I'll make it $30,000 a coin to round up, but right around $30,000 a coin. From January to April, Bitcoin saw a huge price surge. So in April, we saw Bitcoin prices hit right around $65,000 a coin. So we're talking about more than 100% price growth in just a few months. Then by May, cryptocurrency prices crashed, including Bitcoin, and Bitcoin prices came all the way back down to right around $30,000 a coin. Back to where we were back in January, but more than a 50% price drop from April. Then by the end of May, so I'm gonna keep it right here, we saw prices go back up to around $40,000 a coin, and everybody thought that Bitcoin prices were about to recover like this. And then we go back to June, and now in the early part of June, we saw Bitcoin prices come back down to right around $30,000 a coin, and we are still seeing a ton of volatility in the Bitcoin and cryptocurrency market, and now people are wondering what the heck is going on. And that's also when JP Morgan Chase came out and they said that this Bitcoin crash is not over. The reason I bring up JP Morgan Chase Bank is because, for one, JP Morgan Chase Bank is one of the largest banks in the world, and second, Jamie Dimon, who is the CEO of JP Morgan Chase Bank, has had some very interesting kind of interactions with Bitcoin. You might remember back in 2017, Jamie Dimon came out and said that Bitcoin is a fraud and anybody who buys Bitcoin is stupid. Then, just 1 year later, he came out and he said that he regrets making the statements that he did about Bitcoin, and he says that there is underlying value behind Bitcoin, and he said it's not a fraud and that he believes in the technology. Now, in 2021, not only is JP Morgan Chase Bank saying that there's going to be a much bigger Bitcoin crash, but Jamie Dimon himself has come out and said that he is not a supporter of Bitcoin and that he has no interest in it. Talk about a change of emotions. So if you want to know what is really going on in the world of Bitcoin and cryptocurrency, because cryptocurrency has become a lot more than just Bitcoin now, you are in the right place, because that's what I'm going to be talking about in this video. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our free and brand new Guac Talk server on Discord. This is a free place for you to come in and chat with other minority mindset thinkers. We have channels where you can talk about the stock market, the cryptocurrency market, the real estate market. You can talk about money management and how to build wealth. This is a place for you to hang out and chat with other people who have the minority mindset, that we can network with other people with the minority mindset, and it is completely free. So if you haven't already, I'll put the link to how you can join our free Guac Talk server in the description below. First things first, let's understand what a crash is. When we're talking about the stock market, typically you talk about entering a bear market, meaning a downward market, when the stock market falls more than 20% off of its highs. And so if we define a crash as a 20% price drop, well then a 20% price drop off of a $50,000 coin or a $50,000 Bitcoin would be Bitcoin going from $50,000 down to $40,000 a coin. Now, if you've been around cryptocurrency for any period of time, you know that a 20% price drop isn't very uncommon. Cryptocurrency is still a relatively new asset class. You have a lot of people trading the assets, you have a lot of people trading them on margin, and you have a lot of uncertainty in these asset classes, because one day, you never know, China will come out and say that they're regulating cryptocurrency or they're not allowing cryptocurrency, and these things have a huge effect on the price of cryptocurrency. Now let's backtrack a little bit and really understand what caused a sudden rise in Bitcoin prices and cryptocurrency prices, and what caused a sudden crash in cryptocurrency prices. I feel really weird saying this, and it's almost scary how much power one person has, but it almost feels like Elon Musk has a lot to do with the cryptocurrency rise and fall. Back in February of 2021, Elon Musk came out and he said that Tesla would start allowing Bitcoin as a payment to buy Teslas. And when he said that, he also said that Tesla was going to buy $1.5 billion worth of Bitcoin. As soon as he said that, people started to rally behind Bitcoin and cryptocurrency and Elon Musk and Tesla, and we started to see Bitcoin prices skyrocket. That move by Elon Musk also triggered a few other businesses to start getting into cryptocurrency and buy some cryptocurrency to move their assets away from cash to Bitcoin. 3 months later in May, Elon Musk came out and he said that Tesla would no longer accept Bitcoin, and so he kind of backtracked his statements. Now let me actually pull back this chart right here so you can see what's going on. Around February, this is when Elon Musk came out and he said that Bitcoin is the future and that Tesla was going to buy $1.5 billion worth of Bitcoin. Then right here, this is when Elon Musk came out and he said that nope, I changed my mind, that's not happening. Then after we saw this major Bitcoin crash from $65,000 a coin to $30,000 a coin, that's when Elon Musk came out again and he said, JK, I have diamond hands, we're not selling anything. So he kind of backtracked, and that's when we saw Bitcoin prices go back up to around $40,000 a coin. But by then, people started to become a lot more skeptical, and we saw cryptocurrency prices come back down to around the $30,000 level, and we saw a lot of kind of hovering around the low $40,000s and $30,000 level for Bitcoin. And we saw the price of Bitcoin really hovering in that $30,000 to $40,000 range. Now, obviously, it's not just Elon Musk that controls the price of cryptocurrency and Bitcoin prices. In May, when Bitcoin prices were coming down hard, China came out and they said that they were going to put bans on cryptocurrency transactions, and they said they were also going to put bans on mining of Bitcoin. So when that happened, along with the whole Elon Musk thing, along with cryptocurrency prices already coming down, it just kind of fueled the fire. But that just shows how volatile this asset class and all asset classes are, because we live in a day and age where influencers such as Elon Musk, such as Kylie Jenner, when they tweet something, it affects the market prices of the asset, especially in the short term. Now in the long term, it really shouldn't make a difference what somebody's tweeting, but in the short term, it really shows you how volatile some of these markets, especially cryptocurrency, are. The thing that you have to understand about cryptocurrency is that it's not just a currency. It's not just there to buy and sell things with. The whole idea behind cryptocurrency is it's backed by something called blockchain. That's what builds cryptocurrency, and the blockchain technology has a lot of uses besides just money. It's a way for you to store your data and protect your assets, and it really provides a way, an easier way for people to transfer wealth or money from one place to the other. The real value that cryptocurrency and blockchain have is they kind of give you the hybrid of money and technology. For example, I do a lot of work in real estate, and many of my contractors have to be paid through checks. And so I have a checkbook, and anytime I want to pay one of my contractors, I have to open up my checkbook and write out the check and then sign it and then give it to them. But if my checkbook falls into the wrong hands and somebody writes themselves a check and they forge my signature, well, they will be able to go and cash that check, because the only kind of layer of protection that you have with a check is a signature. Your signature is one of the worst lines of defense when it comes to security or protecting your account or money. Blockchain gives you the ability to add more layers of security behind your money, and now when you're transferring money in the future, it's not just going to be through a signature. They'll be able to track you. Maybe they'll be able to track your fingerprint or your face recognition, or maybe even your heart regularity. That's what people are working towards with blockchain and cryptocurrency, because they want to make the transaction of money safer. The second value that cryptocurrency provides is through the transfer of money, because now if you are in the United States and you want to send money to India, it is not very easy. It's not always very cheap, because now you got to go to the bank and you got to wire them money to India. It might take a week for the money to get there, if not a week, maybe a couple of days. And on top of that, you're going to have to pay a whole bunch of wiring fees, and you have to go to the bank to do that, and you have to go through all these kind of different steps to send money to India. Now with cryptocurrency, the whole idea is you can send money from one wallet to another just by moving coins from one wallet to another, and you don't have to worry about paying those fees, and they can happen almost instantaneously, because now the money is these coins, which are digital. And so if you can just move coins from one wallet to another, it can happen almost frictionlessly, so it's very easy to move money from one place to another. Now while these things might sound like a good thing, like it might sound like it's a good thing for you to have this extra security through blockchain, and it might sound like it's very easy to transfer money through cryptocurrency, it's not good news for banks, and it's not good news for governments, because banks make money when you go there, when you send money through these slow and inefficient processes, because that's how they can skin you alive by charging you fees to do that. And it's not good news for governments, because governments get their power through the monetary system, and if they cannot control the monetary system, then they lose a lot of their power. So governments and banks don't want to see the advancement of cryptocurrency and blockchain unless they can have some sort of control or regulation over it. Now, if I'm just being completely real with you, yeah, I think there is a lot of future with cryptocurrency and blockchain. We're going to see that happen over the next decade, but I really don't think that's going to happen without some sort of kind of interference or intervention by the government and banks. I mean, you can say whatever you want, but just realistically speaking, it's going to be very hard to see the government or banks lose their control over the monetary system. So that's the thing that makes cryptocurrency so interesting as a currency or an investment is something called the network effect. If you go and you start your own TikTok page and you go on TikTok and you're like, ooh, this is kind of cool. I wish I had some of my friends on TikTok with me. And then you go to school or you go to work and you start telling your friends and your family and your coworkers about TikTok, and then you get 10, 20 new friends. Well, what happens? Now you just promoted this app to your friends because you really like it, and now you might get a few new followers, you might get more likes per post, you might get a few new views, but that's really the extent of it. With cryptocurrency, this network effect is a little bit different, because if you start using a cryptocurrency that you like, and then you start to like it, and then you tell your friends about it, you say, hey, I'm using this cryptocurrency, I really like it, maybe you should join it too. Well, now your friend might come in and they might buy some of this cryptocurrency, and now not only do you have another user in this cryptocurrency, but the value of your cryptocurrency is going to go up because another buyer just came into the cryptocurrency. Remember, the price of any asset, including cryptocurrency, is dependent on supply and demand. When you have more buyers and sellers, the price of this asset goes up. So if you tell your friends to use this cryptocurrency and they start to use it too, and they start buying in, the value of this cryptocurrency will go up because you have more buyers coming into this cryptocurrency. So now with this network effect, not only do you have more users of this cryptocurrency, but you just effectively made more money because now more people are buying into this cryptocurrency. So for you internet marketing nerds out there, it's kind of like an inherent built-in affiliate networking system, because now anytime you recommend this cryptocurrency to somebody else, you're making a little bit of money because the value of your cryptocurrency goes up as more people start buying in. This is one of the concepts that you have to understand if you really want to understand cryptocurrency, because otherwise you're going to hear people talk about, why are there so many different cryptocurrencies out there? Why are there so many different coins? Aren't they all the same? Well, not exactly. In the future, what you're probably going to see happen is you're going to see even more coins come out. You're going to see many different communities create their own coins, and they're going to be promoted by their own communities, and then you're going to be able to use that coin to buy certain things within the community. So I'm going to give you a completely hypothetical example. If we went out and we created a minority mindset coin or the guac coin, and we started promoting this, now if you bought into this guac coin and you told your other friends about this guac coin would be more valuable. Now what you can do with this guac coin is maybe you can go onto our website, buy some apparel for yourself. Maybe you can go to our website, buy some classes, buy some coaching. And so if the value of your guac coin goes up, you'll be able to buy more stuff just because you own these coins. And so chances are you're going to see many of these type of coins created through cryptocurrency, through blockchain, and that is going to be one of the ways that communities will be able to reward their users. And if users like their community, they'll promote it with their friends to create this network effect. So now when you start to take a step back and you understand the real value behind cryptocurrency, besides just the hope of getting rich overnight, there is real value behind blockchain and cryptocurrency. I mean, this is something that is the future. I mean, it's pretty inevitable, where we're going to see our money advance, we're going to see our money develop, and our future generations are not going to be using cash, they're not going to be using physical cards, they're going to be using coins. The thing that makes everything so kind of confusing between now and then is right now we have a lot of speculation behind cryptocurrency. We have a lot of people buying into Bitcoin and cryptocurrency with a lot of margin, meaning debt. We have a lot of greed. We have a lot of people trying to get rich quick. And so these three things can cause huge volatility spikes and crashes in the cryptocurrency market. But you just have to understand, what is your goal with this cryptocurrency? Are you buying it for the hope of getting rich quick? So you're just trying to trade it? Sure, you want to do that. It's gambling, but you can do that. Or do you believe in the underlying value of this thing? And if things come down, that's when you can just come in and buy more. A few years ago, back when the 2007 crash happened, what a lot of people were trying to do was they were trying to figure out what was going to be the next cryptocurrency, what was going to be the next coin that was going to take over the dollar. But I think what a lot of people are starting to realize now is it's not just going to be one cryptocurrency that's going to be used. It's going to be many different coins, and you're going to be able to transfer between one coin and the other. And so this is where, again, you have to understand, sure, we could see a cryptocurrency crash. It is very possible. I mean, we saw the .com market completely get annihilated in 2000 and 2001. That doesn't mean that .com companies don't exist today. I mean, the internet is what everybody uses. And so just like that, yeah, we can see a cryptocurrency crash. Yeah, we can see Bitcoin prices crash. But that does not mean that there's no value behind cryptocurrency and blockchain. There's a lot of value value behind these things, but you have to separate the value from the present day price, because sometimes these prices can be artificially inflated or deflated depending on what traders are doing, depending on how much margin is out there, and depending on how much greed is out there. If you enjoyed this video, here's a video about building wealth that I think you'll love, and while you're at it, download our free money management PDF, and as always, keep hustling. You might have heard somebody say something like, on average, the stock market grows by 8 to 10% a year. Now, while that might be the case, that does not mean that the stock market goes up like this.